Okay, so Redpoint e.ventures is a new venture capital firm. We started in Brazil, the firm, a year and a half ago. The fund was a year old 3 days ago, so we're relatively new. And our mission is to invest in Brazil according to the best practices of Silicon Valley. And the firm is a joint venture between two well-established funds from the Valley. So one is Redpoint Ventures, the other one is called BV e.ventures, and that's where we got our name from. So Redpoint e.ventures comes from the JV that we have. The ecosystem here is quite unique. It is definitely something really, really hard to replicate. It's actually pretty much impossible to replicate. The core for our fund, though, is to invest in startups in Brazil. So investments in the Silicon Valley are done by the sponsoring funds, as we call them. So Redpoint and BV Ventures are the investors looking after opportunities here. We are focused exclusively on investments in Brazil. It is at the same time very easy and very hard. The easy part is to understand the principles behind it and why they work. And most of them are quite intuitive, not all of them, but most of them are. And they have been tested here for 40 years. So it's relatively easy to understand how it should work. To actually make it work is the hard part. Let me try to give you a few examples. So it's fairly straightforward to understand that, for example, tolerance to failure has to be in the ecosystem. It has to be accepted, has to be understood. It doesn't necessarily have to be worshipped, as sometimes it happens here, but it definitely has to be a part of the process. People have to understand that a startup failing is not a disaster. It's a bad outcome, but it's part of the process. So this is relatively easy to understand. Any entrepreneur understands that. Any investor should understand that. But it's really hard to go into a country, a new ecosystem, be it Brazil, Russia, China, anywhere in which the entrepreneurship culture is not there yet, to convince people that this is normal. It's easy to explain, it's really hard to do. So even for the entrepreneurs, to expect that their mother, their friends will, understand that he failed as a positive thing, or at least an acceptable thing, it's really hard. So the cultural part is really hard. It changes from funds to funds and industry to industries. I can explain what we look first and foremost. We are early stage investors, so our core investment is what we call the Series A. So we are not the angels, not the seed. We have a seed program, but our core is the Series A. So it's not a mature company. So the things that we look the most is, first and foremost, is people. It has to have the right team. It has to be a team that we trust, a team that we believe can execute. And this is by far the biggest value that we look after. The second one is the size of the market. And the third one is the quality of the product, or you can call it the product, the problem that's being resolved. Depending on the stage of the company, you can call it different names. But that's the order that we look, especially because it's very early. And we believe that with the right team and a very interesting market, if we have to tweak the product, we can still do it. But if we had a fantastic product but the wrong team, it's going to be a disaster. When they talk to the investors, not being prepared, I think it's the biggest one. So it is a recent trend that you can work with Canvas, you can do things in a faster fashion. Investors are also helping increase the gap by being happy to just take a pitch, a couple of slides, and so on. So what is missing is the traditionally writing a business plan, old style, would force the entrepreneur through a structure of thinking. And most of the entrepreneurs that get past the first meetings are those that have those steps really thought through. So I'm not saying you have to write a business plan, but you have to be well prepared as if you had done one. and people just jotting down a few phrases on a pitch and trying to stand in front of people. We do that all the time, in and out. So it falls apart very fast if you are not properly prepared to present. It doesn't work for all the companies, for all the industries. So there are companies that just can't bootstrap. It's definitely in an industry that allows for that. It is a very interesting strategy, especially if you take into account that receiving venture capital investment, it's a rare event. Most of the companies don't. So if you come up with a business plan or a business model that can work on a bootstrapped, self-funded, organic growth, it's actually a smart investment decision from the entrepreneur perspective. So if they get to a point in which they have the luxury to decide whether they want to receive investment or not, it's very good for the entrepreneur, and we like it too. Our focus is internet in general, which for Brazil, given the number of companies already focused enough, we're particularly interested in consumer-facing and SaaS, software as service-based corporate solutions. We have flexibility to do beyond that. That's where our core competency is. So we like those better. And when I say internet, it's both the web side and the mobile side. We like both. There is no pre-requirements, no stage. It's the three things I told you before. Fantastic team, big enough market, and a good problem or product to be solved. We do look at a lot more things beyond that before making the investment, but there aren't any other requirements. Doesn't have to be cash flow positive, doesn't have to have revenues, could be a PowerPoint stage as we joke, or a more mature company. We have done so far investments in all of those stages. But we try to cover as many bases as we can. So we keep in close relationship with universities. We have relationship with pretty much all the accelerators in the country. By far the most common and most effective way to get leads is through relationships. So there's a lot of inbound as well. People just go to our website and submit plans. With closed investments that way as well. But the easiest way is when we get the same signaling from different sources. So if we receive the business plan through the website, and then one of our entrepreneurs say, "Well, I know this guy who's a great entrepreneur, you should have a look at their plan." So when we cross signals coming from different channels, it's usually the most effective one. So there is no easy way. It's hard work. One step that a lot of entrepreneurs fail: you should not expect to convince the VC, the investor, to write a check in your pitch. What you have to convince them is to keep talking to you. So it's usually short. It has to be enticing. It has to be interesting, and has to convince the investor that you should keep talking to them. So in our case, you should address those three areas really well. How the team is composed and why you are great, why the market is really big and a lot of opportunities can emerge from that, and specifically the opportunity that you are tackling right now, why it's special and why you are the right team to tackle it. So if you focus on that, it's for us. I think it's much more effective than trying to convince that your DCF is using the right discount rate or whatever. I think it's... I don't have the statistics of the fund just turned 1 year. We are close to the ratio of one investment for every 100 that people like to talk about. We are slightly more selective than that. So we are doing one investment for every 150 that we are looking at, roughly. The reason for that, I don't think it's quality or anything, is we are still establishing our profile in the market, so we still get a lot of companies that send us opportunities that are completely outside of our scope. We do not have a target. We don't have a minimum nor a maximum investments per year. We invest when we find the right company. So for the fund, we raised $130 million in this first fund. We have a magical number, which is around 18 companies, but in 5 years that we have to invest. So we could do that in 2 years, we could do that in 5 years, we could do 12 companies, we could do 25 companies. Depends on the need of capital for each company we invest in. And whether we do or not the investment, the only decision is based on, is it the right company for us to invest or not? It's engagement, scale, and profit would be, all three are very nice, but our core business is Series A. That's how we started thinking about the market. I usually explain that we stand on the Series A, but we have one arm open to the seed side and the other one open to the Series B side. So we're sort of bridging the market. It's an opportunity we have there because of the stage of the maturity of the market. So Series A and Series B is relatively similar. We are very active investors. Our typical ticket for the Series A is $2, $3, $4 million. That's the range we sort of think of. But if a company has need for more, we can consider. If the company actually needs only one, we would do the investment if it's the right team and the right market. So the $2, $3, or $4 million is our back of the envelope portfolio accounting. What drives the investment is how much money the entrepreneur can responsibly deploy in each cycle of the company. So the entrepreneur decides how much money in the end. The big differences between Series A and B, we are active investors. We take usually a board seat and we help the entrepreneur way more than that. We try at least to meet with them much more than only during the board meetings. And we are very active. The seed program, it's a different ball game for us. We are passive investors. We usually co-invest and we take a third to half of each round. Always with co-investors we trust and like, and that trust and like us. So it's an attempt to smooth the capital raising process, which is very painful in Brazil for the entrepreneur. So it's good for the angel or for the seed investor to have a VC that is sort of pre-signaling that at least if it works, there will be serious interest, right? We would not trash our money. And so that's good for the early stage investor. It's good for the entrepreneur. We signal that if they find a co-investor, we are willing to write a check, so helps the seed round. And if everything goes well, we could do the Series A much faster, so perhaps saving him 6 months of fundraising if he likes the offer that we have to offer. On the Series A, Series B is 25 to 35% of the company. Could be less, could be more, depends on the amount of money and valuation, obviously. And I failed to say the ticket for the seed is usually 200 to 300. Also just signaling, could be more, could be less. So we have made a few investments to date. So first one is called Grupo Xangô. It's based in Rio, and it is actually a family of projects centered around a very solid technology hub, aiming to do cloud-based technical solutions for the end consumer. So the first project that they did is called PSafe, and it's an antivirus, cloud-based antivirus system, and it's already the Brazilian software most downloaded to date. It's a free antivirus, and it's doing really, really well. Another investment we have is 55 Social, which is a SaaS-based technology platform to do advertisement inside social networks. So for brands to use social media to create their following and manage their campaigns. There is a company called Sophie and Juliet, which does direct sales 2.0, as we call it, of jewelry, fast fashion jewelry. So they, for the Brazilian audience, is sort of Natura for jewelry, but leveraging technology and social media really, really seriously. So it's quite interesting as well. There is a company called Minuto Seguros, which is an online broker of insurance. It's a very interesting project as well. It's doing great. The founder is really into the industry. He built many insurers, and now he's revolutionizing the way to sell insurance. Let me see what else who I'm leaving outside here. There is a social network for students of universities. So it's not a new Facebook, it's built on top of the existing social networks, but it facilitates the exchange of knowledge and notes and everything that happens informally in universities. They do it on a structured way, organized way on the web. This is a big question mark, obviously, for the market as a whole. We expect 5 to 7 years to be the average time we would be investing in a company, but could be more, unlikely to be less. A lot is still missing. The countries that I have most exposure is usually the framework, so the foundations that come from government, from culture. These are the hardest things to change, and what the entrepreneurs miss the most. Obviously, depending on the stage, you might have more or less capital available, and all these makes differences as well. But it is getting there. It will take time, and it's a marathon. It's not a sprint. Usually when the entrepreneurs have to come up with something for us, there is a problem. Either we select the wrong entrepreneur, or we are asking for the wrong metrics, which is quite often the case. So the metrics that we should watch is what matters for the entrepreneurs. So if we do a good selection, they will know what they are tracking, and obviously we keep a close eye on that together with the entrepreneurs, and we help them with benchmark. We try to get metrics from the Valley. We try to get metrics from other geographies that we have. So for one specific industry, it might be that a benchmark from Russia would be a better benchmark than one from the US for different reasons. So we try to provide that. We try to help them, especially explaining how it evolved in other companies in similar industry in other places. But in the end, the way to manage the business, if you have the right team, is the way they do it. So we actually learn more than teach, and that's philosophically how we believe it has to be done. It's I think it's controversial what I'm going to say, but I think every entrepreneur should focus on what they want to build and why they want to do it, and just go after it. They should not tailor the company to receive VC investment or to be sold fast. All these only reduces their odds of achieving any of these things. So I think the right way to tackle a career as an entrepreneur is pick a big problem, make sure this is something you are willing to devote your life or a big chunk of your life to, and go after it with all the energy that you have. Because then the other things come along. If you have the right team, if you have that mentality, you will attract the right people. With the right people, we increase a lot your odds of attracting good capital. If you bring good capital, everything becomes easier, not easy, but easier, and then it falls into place. But I think if you try to game it, if you try to, just do it for, short term, odds are very, very narrow. Happens, but very narrow. If you, pick something that you really believe in and devote energy to it, if you are the right person, odds are that it will fall into place for you.